Certain indicators are good and others are not as important. Occasionally you see some that are so clear and in your face you can't deny them. They are a red flag waving in front of you, getting your attention. The central bank might be able to cover up the disaster that is the stock market, but they can't cover this up. You came here for the truth. Today we are going to look at these few charts and I'm going to show you something very powerful. Let's begin right away. This is right from the Fed's own website where we look at commercial and industrial loans. It's a little bit difficult to see on this chart, so I'm going to fast forward ahead to this one here, which shows us the shaded areas, and those are the previous recessions. Okay, the last 3 recessions that were encountered in the US. Every single time this has started to turn onto a decline, you will see that there has been a recession right after. This is a very clear warning sign. It didn't happen once or twice, it happened 3 times previous. Every single time this occurred, a recession followed. Okay, this is a very clear trend to me. Another thing that I want to note is the fact that every time that this occurred, the drop was more and more dramatic. And if history is any guide, this next time could be basically a straight line downward. I would suggest to everyone that we need to keep a very close eye on this in the coming, not months or years, but in the coming days and weeks. So keep your eyes peeled on the commercial and industrial loans. I believe this could be something. Now, is it the only indicator to pay attention to? No, absolutely not. But it does show you that 3 previous occasions something occurred and that we are moving into that exact same direction now. Could it be 4 for 4? I'm not sure. Let's keep our eyes on it. Look at this. Commercial bank loan creation year-over-year change. It is absolutely falling over a cliff at this time. And it's been going on now as a trend for the past couple years. It's not just something that happened over the past few weeks. We're looking at years, bringing us back to numbers from, look at this, back to 2011. So this is not a good sign for the real economy. Real estate loans year-over-year change, what you can see here again is a decline. Now this is not as far back, but it does show you that for several months there has been a decline in the real estate loans. Moving on to this, commercial auto loans year-over-year change. Again, another decline. This is all compounding. You can see that it's not just one sector that's affected. It is seemingly throughout the entire economy affected. Look at this. There's a whole article here. I'm not going to get into the whole article. I just wanted to cover one point from it. Household debt has been growing at multiples of income, a disconnect that can only exist in a wonderland of permanently low interest rates. If interest rates rise, this will change entirely, and they're going ahead with it. There's the meeting, the Fed meeting, and perhaps at the time that you're watching this video, the Fed meeting has already occurred. Whether or not they will increase interest rates, that seems to be the way they're going. They're slowly but surely increasing rates. If they get to a certain point, it's going to collapse the economy. It has to. What about the national debt? It's already at a rate they can't service it. It's impossible. And they're increasing the interest rates. That's making it even worse and worse. It's compounding the problem. I think they should increase rates, but ultimately it's going to send in this crash. Look at this chart. Debt versus income. And when you look at it, in the United States, it's terrible. Okay, we're looking at over 100%, but it's nothing compared to Canada and even worse, Australia, where you can see that the amount of debt that people are getting themselves into is astronomical. It is the highest it has ever been, ever, right now at this time. There's no deleveraging occurring. There is no sense of paying down the debt, beginning to save, and then, getting into these big ticket items when you have a little bit more. No. What you do is you go to alternative lenders who will lend you things at ridiculous rates, but it's okay because as long as interest rates remain low and as long as everything in the global economy continues the way it is, covered up, that is, then we're okay. But of course, that's not the case. It will not be the case. You can cover up the stock market, but you cannot cover up the real dying economy. If you found this video informative, please give me a thumbs up. Your thumbs up supports me. If you want to support me, the easiest thing you can do is give me a thumbs up. I also like to see your comments down below. No other YouTuber out there replies to as many people as I do. I reply to every single email I get, and I try to reply to as many comments as I possibly can. Your comments are something that I look forward to. If you found this video informative, I know you will find my books, The Money GPS and my new release, Global Economic Collapse, even more informative. The first book was about the 4 asset classes, how to profit from them. And the new book touches on the familiar subjects, but I also get into tax incentives, reducing your monthly expenses, and how to become self-sufficient, which I believe is the solution. So you can check those out at Amazon. There's a link in the description. And I just wanted to mention to you that I just finished an interview with X22. If you're a fan of X22, then check him out. I believe that tomorrow, as of the posting of this video, he will be posting it. So check him out over there. If you are only on my YouTube channel, then you can always go to my YouTube channel, main channel page, and scroll down to the interviews playlist, and I will add it in there. Take care.